Welcome back to Investing Dose, where we break down the market as hottest stocks in a way that's easy to understand and relevant to you. Today, we're diving into Palantir Technologies, ticker symbol PLTR. Is this data analytics company a hidden gem or just another overhyped tech stock? Let's find out. Let's start by getting to know the company. Palantir was founded by Peter Thiel in 2003. It specializes in big data analytics, offering platforms like Godem and Foundry to help organizations extract insights from massive amounts of data. While often associated with government contracts, especially in the defense and intelligence sectors, Palantir is increasingly making inroads into commercial sectors. In terms of financials, Palantir reported a revenue of $1.9 billion in 2024, marking a 20% increase compared to the previous year. This growth was driven by expanding customer adoption across both commercial and government sectors. However, profitability remains a challenge. The company posted a net loss of $100 million. While this is an improvement from previous years, it still falls short of what many investors would like to see. Their adjusted earnings per share came in at 8 cents, missing estimates by a few cents. Despite this, Palantir's free cash flow is positive, which is a good sign for the company's financial health. Regarding growth potential, Palantir's story is quite compelling. Their expansion into commercial sectors, especially in Europe, including Greece, shows great promise. The fact that they've secured a significant contract with Greece, a country heavily reliant on tourism, shipping, and energy, signals the growing relevance of data analytics in these vital industries. The use of drones in tourism to provide immersive experiences, real-time monitoring of ships at sea for maritime safety, and optimizing energy grids for renewable sources are just a few examples of how Palantir can add value in Greece. This potential for growth is enticing for investors, but it also comes with challenges. The company faces stiff competition from established players like Snowflake, as well as from traditional IT giants like IBM, who are also expanding their data analytics offerings. But let's talk about valuation, because that's where things get really interesting. Currently, Palantir is trading at a price-to-sales P/S ratio of around 15, which is higher than many of its direct competitors. For context, Snowflake, which is also focused on data analytics, trades at a P/S ratio of about 20. On the other hand, more established companies like IBM, though not as focused on data analytics, trade at around 2. This means that investors are placing a significant premium on Palantir's growth prospects. Any shortfalls in meeting these high expectations could lead to a sharp decline in the stock price. Before we wrap up, let's hear from some experts. At least 2 analysts have commented on Palantir recently. In April, Bank of America analyst Justin Craig reiterated his buy rating on the stock with a price target of $22. He sees the recent pullback as an opportunity to buy into the company. However, in February, Morgan Stanley analyst Hamza Hidayah downgraded the stock from overweight to equal weight with a price target of $16. He believes that the stock has already factored in positive news and has a more cautious outlook for the near term. As we wrap up our investing dose for today, here are my thoughts for Greek investors. Palantir presents an interesting opportunity for diversification into tech stocks, especially for those looking to expand beyond the familiar names like Microsoft and Apple. The potential for growth in data analytics is evident, and Palantir is well-positioned to capitalize on this trend. However, it's essential to be aware of the company's volatility and its high valuation. Investing in Palantir should be seen as a long-term play. Short-term fluctuations are likely and may be influenced by factors like broader market sentiment towards tech stocks or changes in government policies regarding data regulation. Thank you for joining me today. If you found this analysis helpful, please hit the like button. And if you're not already subscribed, please do. We've got more insightful stock breakdowns coming your way. Until then, stay savvy and keep investing.